Today's topic, Cineworld. Hi, welcome to Dan Talks Money. Today's video is going to be covering the topic of Cineworld. So they've been around for years and years. They got like a monthly subscription plan that loads of people utilize, and they've been, oh my gosh, hammered down in the last 2.5 years. So Cineworld are the second largest cinema chain in the world. They've got over 9,500 screens in 10 different countries. Before the pandemic began, they must have been really confident in the business because they acquired Regal Cinemas in America. And that was a massive cash burden for them to purchase, but they went ahead and they did it. They had guts, I suppose, to invest, not knowing what was just going to be coming around the corner. A big storm. Pandemic. So, just imagine, they've just bought this massive cinema chain in America, huge audience out there, and then the pandemic hits. They found themselves in a very sticky situation, and obviously, the whole stock market just went crashing down. Very low, and a lot of them have made a very good recovery, most hitting their average heights, but Cineworld has been left behind. We had a little peak when James Bond hit the screens. Good old Daniel Craig. Certainly brought in the fans. Then the shares spiked. I think they went up to like 78 pence. And I'm thinking, that's my little baby. Keep going, keep going. But they were knocked back down again. The outlook out there is not very good. There's lots of bad stories, but there are some positive ones out there as well. But I do like to cover, different stocks, and Cineworld, I'm still quite proud to admit is part of my portfolio. Even though they've got like over £6.1 billion worth of debt. And they've just lost their court case in Canada. That's going to cost another 725 million. Just keeps getting worse. But there's a few things that could happen there. They can appeal against it. They can negotiate the price that they would have to pay for pulling out of the purchase. So I am still optimistic with Cineworld. And I did add a few more to my portfolio when the price dipped on the announcement of the court case loss in Canada, because I believe that eventually they will go up. I mean, they are the second biggest in the world, and companies out there, they always hit a tight spot at a certain point in their life, and if the people behind the steering wheel of Cineworld thought that they could pull off buying the American Regal cinema chain, then they probably had good prospects in mind. So I'm sticking with them. Not to say that I'm right, obviously. It's a stock market, who knows what's going to come around the corner. But I don't think a company of that size could fold easily. There's still a lot of plus side in there, and not to forget that a lot of the owners, they've got a very large stake of Cineworld shares themselves, so they are going to fight tooth and nail to rescue the cinema chain and level out their balance sheets. You know, they've still got a couple of things under the belt. There's talk of them, you know, jumping into the stock market in America, which could be huge. And I think to myself, well, why not? You know, you've got yourself into debt purchasing the business, so get a bit of cash back from it. You know, that's one of the biggest opportunities in my eyes from the research that I've been doing. You know, and I think that's probably going to come around this year. You know, looking at the position that they're in, and obviously with the court case now in Canada, they're going to probably want to strengthen their balance sheets pretty quickly to get them into a better financial position to increase the share price in the UK and give new investors something to look forward to in America. So yeah, that's my thoughts on Cineworld and my little stake in them. I'll leave you make your own mind up, do your own research, but I'm sticking in. I'm holding. So thank you for watching this episode of Dan Talks Money, and I'll see you soon.